Well, this week, James Hardie shares were smashed on the stock market after reports that it was about to be taken out of key indices in its quest, without shareholder approval, it should be said, to move its stock market listing to America. And the temptation to shift to America must surely be there for more Australian companies. The capital markets in America are deeper, the domestic market many times larger. Energy prices a third what they are here. Corporate tax rates as well are much lower. An obvious company to move, in my opinion, is Woodside. Our biggest oil and gas company is now truly a global business, with big operations in Louisiana, the Gulf of Mexico, and in Mexico itself. Its project approval time is much faster elsewhere than it is here in Australia, where its giant Browse field in WA is still caught up seeking environmental and regulatory approvals. Well, earlier this week, after its Investor Day, I sat down with its Chief Executive, Meg O'Neill, and she explained why she still wants Woodside to be firmly keeping its base here in Australia.
So we've been on a journey the past few years making decisions that are going to transform the company. Between 2024 and 2032, so an 8-year time period, we're going to increase our production by 50%, increase our operating cash flow by more than 50%, and that will give us the capacity to increase our dividends to shareholders by 50% per share, with money left over to either continue investing in future growth or support our shareholders with further returns.
Because I would say that that is an unusual resources company. In history, resources companies held onto their capital because they didn't know where the next bunch of capital was coming from and paid very small dividends. You've taken a different path here to pay more out to those shareholders. Why have you done that? So
Woodside has always been a significant dividend payer. The last 12 years, we've paid 80% of net profit after tax to our shareholders. So once we started up the Pluto LNG project, we were at a point in time where we had a lot of cash flow coming in, and we said, look, we've got to reward our shareholders who stuck through us in these very capital-intensive construction phases that we were in. Really impressively, we've been able to keep up those high returns in the capital-intense period that we're in now. And we know our shareholders are counting on us to continue returning those dividends. Our Australian dividends love the franking credits that we return. We know that is highly valued, and it's inefficient for us to keep them. So we want to get them in the hands of the mums and dads who count on Woodside. Okay, so it just also strikes me that you are now one of the largest oil and gas companies in the world, energy companies in the world. Why would it not be better for your company to be based in the United States, where the regulatory environment, the capital markets are richer? All of these things seem to favour your company as compared with Australia. Why stay here? Look, we're a proudly Australian company. This is where we were born, in the town of Woodside, a little bit more than 70 years ago. We've built our business in Western Australia, have a material business in the Gippsland as well, so this is home for us. That said, we're still able to access those great opportunities in the U.S. So some of our significant growth opportunities are investments in the U.S. We're able to access the capital market. We have great access to the bond market. We raised $3.5 billion in the U.S. bond market earlier this year. So the fact that we're Australian listed isn't an impediment from taking advantage of all those things that the U.S. offers today. Okay, so the U.S. offers all of those advantages, but there is even the regulator this week raising issues about whether Australia's capital markets are competitive enough, whether the technology is kept up. All of these things would otherwise be obstacles to businesses such as yours remaining an Australian listed company. Well, again, we've got such a strong Australia shareholder base. We've got a lot of, and our revenue right now is 75% Australian. And even as our business transforms, Australia will still be an important part of the market for us. So again, we can get all the good things out of the US whilst remaining ASX listed.
Okay, so then tell me about the Australian regulatory scheme for an energy company such as yours. It's been notoriously slow to grant you approvals for the extension of the Northwest Shelf, of even Scarborough. Browse in particular is a field that really is still waiting to be developed. Is there a danger that Australia leaves valuable hydrocarbons in the ground because government's just simply not fast enough or astute enough to be able to develop them?
Look, we've been really clear about a couple of things. One is the importance of gas in the energy system, both in Australia, and the importance of Australian gas for our customer nations abroad as they think about energy security, national security, and decarbonisation. Today we talked about the role that LNG could play to help displace coal in the world's power generation mix. So gas is needed. I think we've been moving the needle on people understanding that gas will be important in Australia. If we think about how to decarbonize Australia, we need to get rid of the brown coal. And replacing it with renewables and gas is the low emissions way to do that keeps the lights on for everybody. So I think we're starting to make headway. But that said, the regulatory environment continues to be very challenging. Northwest Shelf life extension, we were very pleased to get that approval. But there's been challenges along the way. We're in court on multiple matters related to some of the developments we want to progress, including Northwest Shelf. Our message to government is we've just got to speed things up. It's too difficult to invest here.
Okay, so it's too difficult to invest here. That's not a message any government would like to hear, I would imagine. And other places that you have investments, in Africa, in the United States, in Mexico, even in Korea you're doing some work as well. These environments, these jurisdictions seem to be more welcoming of your capital, of your presence.
Look, everywhere we go, the governments want to ensure that a company like ourselves is doing the right things, that we're paying taxes, that we're investing in community, that we're creating jobs. We've done all of those things for 40 plus years here in Australia. We're doing those things now in places like Mexico and Louisiana. We would love to continue doing that in Australia. We are with the Scarborough project. We'd love to do that with vows. But again, governments will make choices. They'll make policy choices about where they want their nations to head. Perhaps the encouragement for the government here is if we think about things like critical mineral processing, reindustrialization of Australia, all of that requires energy, and all of that is going to require natural gas. You've got to have natural gas to have the heat required to process critical.
Artificial intelligence is the obvious one to talk about.
Artificial intelligence, yes. So, if we're going to unleash the technology capability and the potential that this nation has, we've got to be able to have that sovereign AI capability, all of which requires power at large scale.
So you're already building one large ammonia plant, which is fairly close to being completed. Right. So is it tempting for a business such as yours to do more of that, to add value to your gas so you can actually send it as gas through a pipeline, create LNG and ship it around the world, or create products including ammonia and hydrogen? Because that sends you right up the value chain in terms of your product, doesn't it?
Sure. So we've spent a lot of time on what we call our new energy strategy, where we've looked at what are alternative molecules that have lower carbon intensity when our customer uses them. And hydrogen and ammonia fit in that space. So whilst ammonia has many uses today, fertilizer, explosives, the opportunity we're pursuing is the use of ammonia for energy, either in power generation or marine transportation. There are some good positive policy signals out of places like Europe, as well as Japan, Korea, Singapore. But we need to make sure that we're disciplined with our investment dollars. And the markets for lower carbon ammonia are moving a little bit more slowly than some of those nations would have suggested a few years ago. So we're laser-like focused on demonstrating value from this Beaumont New Ammonia project that we acquired last year, making sure that we've got high-quality customers when we've got that low-carbon ammonia to sell. And we'll be very disciplined before we start further expansion in that space.
So just take me finally to Bass Strait. And I want to go in terms of you acquiring the interest in Bass Strait, where Woodside first looked for oil and gas, that now, because of the deal you've done with ExxonMobil, you get control of it. You can start to explore again. Is there much gas left there?
Yeah, so we're very excited about Bass Strait. Through the BHP Petroleum merger, we have that 50% stake. And one of the things that we've seen, and our team that's been working it has seen, is that there are some opportunities to squeeze a bit more gas through that asset. So when we negotiated the agreement with ExxonMobil, we said, look, we've got to have a joint venture agreement that allows us to pursue those opportunities, even if ExxonMobil isn't as interested.
So is this gas that's known to be there? Is this gas?
So there's about 200 petajoules of gas that has been discovered, just not developed. So we're excited about those opportunities. And I'm really excited about the ExxonMobil team coming across. So we'll take over operatorship next year, and about 600 people will come join the Woodside team. I know they've got things up their sleeve. I know they've got opportunities, and so we look forward to having the new team on board to squeeze maximum value out of this asset that we can.
Okay, so I seem to remember that Bass Strait was due to run out early 2030s, 2032, something of that nature. How long do you imagine with these extra resources you can keep Bass Strait running and keep the gas going into Victoria via the Longford plant?
Yeah, look, I'll have to give you a date once we get our hands on the tiller.
Yeah.
But cautiously optimistic, as I said, 200 petajoules in the 4 known opportunities, and then we'll see what the team is able to unlock by hard work, engineering know-how, and that creativity.
So you've developed this story, the narrative about Woodside and its future. Does it sometimes disappoint you that politicians and or others in Australia don't understand that story well enough?
Well, look, I think there's an opportunity for us to make sure that we are effectively telling our story. And hopefully you've seen some of the ads that we've been running talking about the role of natural gas in the power sector, in the manufacturing sector. We sell natural gas to miners, to mineral processors, to smelters. All those sorts of businesses that need our product to be profitable in their own spaces. So we're spending a lot of time on this communication journey to, again, help politicians and the ordinary citizen understand why natural gas is so important.
Meg O'Neill, always good to chat to you. Many thanks for your time.
Thank you.